Boeing shares have nosedived this week after the latest in-air incident for one of its aircraft. So we're going to go through what the incident could mean for the company's share price, look at its fundamentals, and of course, have a gander at the charts to see if the technicals might be able to tell us a little bit about the direction of travel for Boeing shares in the future. But before we get on to that, remember to subscribe to our page, like the video, and place a comment with your views on where Boeing share price could be heading to next. So the latest incident for Boeing, as has been covered extensively in the news media recently, has come after a in-air mishap that saw a door or a window blow off one of its 73 MAX 9 aircraft. Now, of course, there's a lot of context to this, and this follows the major catastrophic incidents a few years ago to its 737 MAX 8 aircraft, which resulted in the deaths of hundreds of travelers in the Asia and Africa. So what we're seeing here is really a concern about the potential lax manufacturing and risk controls at the airline, and maybe signs that while the initial thoughts about the previous incidents to the 737 MAX 8 were attributed just to the engineering of those particular aircrafts, that this could be a problem for the business in a greater sense, that it lacks, again, risk management and quality assurance controls to ensure a safe product. Now, this is especially proven the case with the deliveries of the 737 in question in this Alaska Airlines incident, delivered only 3 months ago. So the potential here is that the controls or lack thereof that led to the delivery of this aircraft to Alaska Airlines may effectively still be in place and need to be overturned in their totality, which obviously has incredible financial and operational costs. In fact, several airlines have also grounded the MAX 9s recently. United, for one, who's a major purchaser of these aircrafts, as well as Alaska. And upon inspections of the other aircrafts in their fleet, the 737 MAX 9s have discovered loose bolts on some of those aircraft. So really, what we're seeing here is an impact on the share price on the basis that this could be a very costly issue to solve. And not only that, may even result in a pull of existing orders and maybe a drop in future orders for Boeing aircraft. To take a step back and look at a broader view of the company's fundamentals, and leading into this incident, while things were looking fairly constructive for Boeing, despite the fact that the company, which is due to report on January 31, is largely expected to continue to post losses going forward. But the analyst community were very upbeat on the stock. It had a very strong buy consensus rating. This is according to data compiled by Bloomberg, and had a price target of around $271, which was at a premium to where even the share price was prior to this sell-off because of this incident. Now, this was all happening, and this strong sentiment was all coming about despite economic headwinds building for Boeing. A lot of this due to weakening demand going forward, or expectations of weakening demand going forward because of a softer economic environment, and also by extension, a drop in the demand for travel, ergo orders from airlines, but also supply chain issues that the business was running into that was keeping business costs relatively elevated, at least compared to pre-pandemic levels. These hadn't normalized. So really the outlook had depended on demand as well as the business's ability to deliver upon that demand. And this is where really the issues start to come up. The business was hoping to see that greater demand. It was hoping in response to that greater demand to ramp up production. But the issue with this incident is it both reduces potential demand going forward for the airlines and also stops the business from being able to ramp up production, compounding those issues, those supply side issues with higher costs and disruptions. So this is what we're really seeing discounted in the share price now as it sells off. And again, risks ongoing volatility to the company's earnings and therefore share price. So let's run through some of those levels for Boeing shares right now. And you can see that the stock remains in a primary uptrend. This is a weekly chart. A trend channel can clearly be seen here with the market selling off from around trend channel resistance and from overbought territory, suggesting that perhaps the sell-off that we did see in Boeing shares were somewhat compounded by technical factors here. Currently, we're running into support around $222 per share with a very key level below that, around $200. Just below that level too, we've got upward sloping trend line support, which if that broke down would start to indicate that maybe the upward trend is turning, the upward trend is breaking down and the trend is turning to the downside. So ultimately, we can say that in the bigger picture, price action looks reasonably constructive for Boeing shares, but with the uncertainty plaguing the company now because of this major incident, there is further risk to the downside. And again, you'll be keeping a look on some of those key levels around $200, a little bit below that, to see if the bears are taking control of the Boeing share price. So that's a little look at the potential flight path for Boeing shares from here. It could be a turbulent future, whether this recent incident proves to be just an air pocket or perhaps the beginning of a bigger nosedive. It remains to be seen. But as we can see, and as we have seen in this video, the fundamentals are looking a little bit precarious amidst all this uncertainty now following this incident, even despite the fact that the technicals are suggesting that the share price remains in an uptrend.